One of these is going to give you big money once in a while, but whereas the other one is going to give you small money but almost every single time. Which one would you pick? Let's find out who actually wins, option buyers versus option sellers. Hi, I am Pranav VK, your options trading expert here at Stockshaala by Kotak Securities. So far, you have learned what exactly is option buying and option selling, so you know already the definitions. In this video, we are going to go beyond definitions and understand how exactly these play out in the real world. Now let's focus on three important metrics based on which we can understand the mindset as well as the trade-off between an option buyer as well as an option seller. The three metrics are going to be our probability of profit percentage, our max risk, as well as our maximum reward. Now let's compare these three metrics for both an option buyer as well as a seller. But to start with, let's start with the option buyer and see how it pans out. For an option buyer, the probability of profit is generally very low. Theoretically, it is only 33.3%. Whereas the maximum reward can be significantly higher if it works out in your favor. At the same time, a maximum risk is very limited only to the extent of the premium paid. Now for the seller, the probability of profit is significantly higher compared to a buyer. Theoretically, it is around 66.6%, whereas in the real markets, it could go upwards of 75 to even above 90% as well. Coming to maximum reward, it is limited to the extent of the premium received. And when it comes to maximum risk, it could be unlimited. But this unlimited risk can always be hedged so that you can convert this unlimited risk into a limited risk, which we are going to discuss in the further videos. Now that we individually summarized the option buyers and option sellers across three different metrics, now let's look at it in a single tabular form so that you understand it better. Looking at the probability of profit, the buyer has very low probability of profit, which is just 33.3%, whereas an option seller has very high probability of profit, wherein it's about 66.6%, but in the real markets, it could go upwards of 75 to even 90%. Which means, as an option buyer, you might make very huge money, but only once in a while. But whereas in an option seller, you are going to make consistent money, but the amount is going to be smaller. Now looking at the maximum reward, we have very high reward as an option buyer if it works out well. But if it is option seller, then you have to be very, very careful because it's going to be limited only to the extent of the premium that you have received while entering into the contract. So that's the main importance between the maximum reward for an option buyer versus an option seller. And finally, let's discuss the most important metric of all, that is the maximum risk. As an option buyer, you're going to have only limited risk, that is to the extent of the premium that you have paid while entering the contract. But as an option seller, you have unlimited risk. So it's very important to make sure you have the right kind of systems and strategies while entering an option selling contract. Think of it like this. As an option buyer, you're actually betting that a specific event will happen at an exact time and date. But whereas, as an option seller, you're actually betting that nothing much is going to happen. So it's your choice whether you want to be on the option buying side or on the selling side. But remember, as a trader, I've always learned that probability is always greater than higher profits. So for me, option seller is the winner. Now let's understand the realistic risk to reward between an option buyer as well as an option seller. Let's consider the option buyer first. An option buyer tries to bet one chip, let's say he pays one chip, and he tries to earn around 5 to 10 chips. Out of 6 different trades, probably he might win only one of the trades. On the other hand, whereas an option seller has to put in a larger initial investment to start with to enter the specific contract, and he tries to win 1 or 2 chips every single time. But the bad news for an option seller is that sometimes when he is wrong, he might lose a large amount of money in a single trade. This is why option sellers are like the house in the casino, where they win many times but lose only once in a while. But whereas option buyers are like jackpot winners. They are waiting for that breakout trade where they can win only once in many times. Now let's understand when to do option buying and when to do option selling. It's not about which is right or which is wrong. It's all about what suits your personality as well as capital. It's wise to be a buyer when, number one, you expect a strong directional move in a single direction. Second, there are some results expected or some geopolitical events because of which you expect higher volatility, which can lead to a directional move. Number three, you are very good at managing timing and you're able to handle the theta decay. On the other hand, it is wise to be a seller when you expect the market to be range bound or flat, and at the same time, you're also okay with managing the risk, that is the unlimited risk, using stop losses or hedges. And finally, you want to do option selling when you're okay with small consistent income instead of large big rewards. So think of option buyers are like snipers, whereas option sellers are like those landlords who collect rent one option at a time. Here's the truth that most people don't tell you. Most beginners, when they start trading in options, they directly jump into option buying because it is cheap. But over time, you'll realize that it's not about how cheap or expensive it is, but rather it is all about probability of profit and consistency. So what do you think most professionals are doing? They're actually doing option selling with proper risk management. At the end of the day, both option buyers as well as sellers can make money. But it is important to know that where exactly you're putting your money and what are you betting on. If you're clear about the concepts between these two, then you can choose what is wise for you. But here is a pro tip. Being an option buyer as well as a seller, I have understood that each of them wear different caps and different mindsets. So either be an option buyer or be an option seller. By choosing either one of them, you'll have a lot of peace of mind and you'll really know what exactly and how exactly you're going to enter and exit your trades. Your decision making will become more data oriented rather than emotion oriented. So let's quickly summarize what we have learned so far. We understood there are three different important metrics that we have to analyze to understand whether you have to go for option buying or option selling. The first one is probability of profit. As an option buyer, your probability of profit is very low, whereas as an option seller, your probability of profit is extremely high. The second metric that we're going to analyze is the maximum reward. As an option buyer, you have very high reward potential because it has unlimited profit potential, but you're going to win only a few times. On the other hand, as an option seller, it is limited to the premium that you receive. And finally, we have the maximum risk. As an option buyer, your maximum risk is only limited to the premium that you pay. But at the end of the day, option selling is going to have unlimited loss potential, but it is not something you have to worry about because you can really manage the risk using hedging or stop losses. Probability is always greater than profits. In the upcoming videos, we are going to introduce you to the world of option Greeks, the forces that actually decides the option premium. Go ahead and like this video if you really understood the difference between an option buyer and seller and share it with your friends. I am Pranav VK and you're watching Stockshaala by Kotak Securities.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.